fulumya n'ennyingiza mu bizinesi yo awo URA esobola okukola omulimu gwayo ogw'emisolo obulungi.
nedda mwami Musoke kye sitegeera IFRIS eyingira etya mu bizinesi yange?
Kakati enkola ne IFRIS eyingiza bizinesi yo mu sisitemu ya URA.
Good morning and welcome to this episode of Tax Mchuzi. My name is Josephine Kabiesiza and I'll be hosting this session. I'll invite our guest to also introduce himself.
Good morning, I'm Collins Mwesije Okwakunda, and I'm glad to be here.
Nice to have you, Colin. So the topic today is the things to do with tax compliance, basically. So maybe we can get into that discussion.
Okay.
If you can help us define what tax compliance is.
Tax compliance is basically the degree to which a taxpayer abides by the rules, the tax rules in their own country, filing their income tax returns and payment. So basically the compliance is abiding by the tax rules of your given country. Yeah.
Okay. Are you able to kind of summarize these tax rules in form of rights and obligations? You know, the tax laws can seem too much. I'm seeing the book you have there, that compendium, and I know that's trying to, the font is reduced and everything is reduced into that one big book.
This big book has a number of laws and taxes, but in summary, however, by the way, this is amendment. What was last year's maybe chapter of tax laws was changed and renumbered and everything. So we have a number of them. One is income tax, and income tax now is cap 338, which was 340 by then. So the Income Tax Act basically has within the Income Tax Act we have withholding tax, we have pay as you earn, and they are all within the income tax. So someone who deals with businesses, they still file pay as you earn, they still withhold if they are required to. And we even have rental, but rental is considered to be a separate tax. However, it is also under the Income Tax Act. Yes. Then we have value added tax, which is now cap 344. It was 349, but now it is 344. And value added tax is on the value added to goods. And it is paid monthly. Yes. Then we have excise duty. This mainly goes for manufacturers, and excise duty is cap 336. Manufacturers and producers of different products. So they pay excise duty excise duty. Then we have stamp duty, which is paid on documents if that document is to be legally admitted in court, or we can example of land agreements and all those documents, you pay stamp duty. And stamp duty is cap 339. Yes, and we also have lotteries and gaming. There's also another it also has an act which is cap 334. This is paid by people dealing in casinos and betting and those, and this mainly is paid weekly, monthly, depending on the way they're supposed to pay. Then the others, for example, Tax Appeals Tribunals Act and Tax Procedures Code Act. Like the word tax procedure, it is a procedural law that guides on how taxes should be collected, the penalties and everything. That's the Tax Procedures Code Act, and it is cap 343. Then of course we have the EACOP, East African Crude Oil Pipeline Act, that is for petroleum. However, petroleum is also under the Income Tax Act. It has a chapter there. And the Tax Appeals Tribunal is for the tax a court, being used in court. Yeah, so this law has those ones I've mentioned are the ones that are here. Yes.
Okay. So can we also get into the rights and obligations?
Yes. Taxpayer has rights and obligations, and where the taxpayer's rights most times is the collector's obligations. And the collector's obligations become the taxpayer's rights. And there are a number of them. I think we should just listed a few. But mainly we have a taxpayer has a right to equity and fair treatment before the law. And under the tax laws, it favors more of a taxpayer, because where there is a contradiction maybe between the collector and the taxpayer, they tend to listen more to the taxpayer before the collector. Then we have your tax affairs shall be kept secret, and tax information in our possession shall be used in accordance with the law. We are guided by confidentiality principle. A person who's a tax collector like URA, you must keep the confidentiality principle. You cannot reveal the records of a taxpayer to anyone. So that's their right. And then maybe timely response to queries. We have objections team, we have ADR, alternative dispute resolution. So when they apply or they appeal, they have to have that timely response. Mainly objections must reply within 90 days, but within the 90 days you're interacting with the taxpayer in case there's more information and what. So that's timely response. And then ADR and any query, because even in other stations like business policy and other, when a taxpayer writes, they expect to get a response in time.
Because they have businesses they're running and things
Exactly. So that's timely response is also key. And then always pay the correct tax. They have a right to pay tax and pay the right one. And then receive professional guidance. Like what we are doing here, you're guiding people watching, and maybe some people walk in, they don't write, but they just walk in and you guide them. Yeah, so then be availed reasons for the decisions. When, for example, objections team or ADR, they always they give reasons after a decision. If a taxpayer objects and then maybe it is not allowed, they will always have a reason why it's not allowed. Or if seek for guidance and guidance is given, but in a negative way, then the reason is always given why the rejection. So they have a right to know why you rejected the application or appeal. And then refund. If a taxpayer is entitled to a refund, then they have to be refunded. And then inspection. You inform a taxpayer before inspection. For example, if maybe someone is selling land, or maybe there is a concept of transfers are going concern, they are supposed to be inspected. So before the inspection, you inform the person that you're going to inspect their premises or businesses, and before going there. So they have that right, because you cannot just come in and that you came to inspect without informing them. They mainly and importantly have a right to object. It is their right to object. Not every decision given by Uganda Revenue Authority is supposed to be taken the way it is, or assessments. So they have to object, and it's their right. Taxpayers also have the right to process your tax returns, entries, and other things. So those are the rights. And like I said, where a taxpayer's right is a tax collector's obligation. So if they have right to object, then you have an obligation to respond to their objection and give yes. Then now, what are the obligations of a taxpayer? What are the rights of a tax collector now become the obligations of a taxpayer. And one of them, we have ensure that you voluntarily register with Uganda Revenue Authority where if the law requires you to register, maybe you've passed the threshold, or due to circumstances during your tax businesses, the way you carry on business, you're supposed to register, then you're obligated to. And then file correct returns and custom entries and forms relating to your revenue. So you have an obligation as a taxpayer to file returns. Then to be honest, dealing with Uganda Revenue Authority, I think that's where most taxpayers are getting penalties and all issues, fines, because they don't fulfill their obligation to be honest. They because a taxpayer has that right to give self-assessment. So when you're not honest, when you're assessing yourself as a taxpayer, that's when you're going to get issues, because you're going to get additional assessments and fines and penalties. So that obligation is most times not fulfilled. Then you have to quote your tax identification number when dealing with the Uganda Revenue Authority. Most times we receive letters seeking guidance, and you cannot even see. If you even find someone is known, they don't have a team. Then the way you have to carry on your work or to guide someone becomes difficult because the person doesn't have a team. And then another one, obligation. Taxpayers are not supposed to get involved in tax evasion and avoidance. We shall maybe have that at a later stage, but you're obligated to be honest and not get yourself into tax evasion. And then to be aware of and comply with a custom quarantine, wildlife, currency, and passenger concession, and make full disclosure of information and correct declaration. Uganda Revenue Authority has introduced this program of voluntary disclosure. Maybe when we get time here, we shall talk more about it. But voluntary is you're voluntarily coming out to tell Uganda Revenue Authority that there is something. A confession. But then you find people still, their confession, they are not being honest. And which is not right, because you're supposed to be forgiven and not pay penalties and fines. But then when you don't be honest again, then you find your voluntary disclosure is not proper, and they won't allow you to get fines off you. Yeah, so those are some of the obligations. There are so many, because every law that I gave you provides procedure and how a taxpayer should behave and what the taxman should do. Yeah.
Okay, but I think those are the major ones, and I think they kind of summarize everything.
Yes.
What has caught my attention is that a taxpayer's obligation is a right for the tax collector, and the tax collector's
right
obligation
is
a right to the tax.
Actually.
I'd never thought about it that way, and I think that's quite interesting. So you mentioned tax avoidance and tax evasion. I thought one of them was okay, and the other one that was bad.
Yeah.
So maybe you can define and enlighten.
Tax avoidance and tax evasion. Let me start with tax evasion. Yeah, you're right. By the way we take it to be, is one is right, another one is not right. But even the right one sometimes becomes wrong, depending on how it is done. So tax evasion can be defined as the illegal non-payment or underpayment of taxes. Someone illegally does or they get involved in an act illegally in the tax matters or transactions, and that is clear. Like most times it is called a fiscal fraud. Like, I know this is wrong, but they still go ahead to do it. Now that is tax evasion. And of course, before tax evasion, of course, when you do something wrong, you're penalized, you're imprisoned, or anything, because it is wrong. You're doing an illegal act. Now, tax avoidance, it is not illegal. It is legal, because tax
There's no
avoidance
law.
is when a taxpayer tries to reduce their tax liability through even without breaking any law, any tax law. And this is done and sometimes called tax planning. Someone says, I'm doing tax planning. They are using the laws drafted, the tax laws drafted, to reduce their tax liability. That is tax avoidance. However, when you look at it from different jurisdictions, Kenya, Tanzania, and maybe the US, tax avoidance sometimes becomes illegal depending on how it is handled. And a case in point is a case of an old case, a US old case of, can use it here, but it's introduced the principle of substance over form. Because when they draft the tax laws, there is a form that is drafted, this should be done, this should be paid, this, and this. So the taxpayer uses exactly what is drafted to shape it in a way that it favors them. But where we look at substance over form, we are looking at the reality. What are you doing? What transactions are you dealing in? Yes, we know there is a law providing for this, but how are you doing it? Because if you leave it open, I can frame it in a way to favor me as a taxpayer, and that creates revenue leakage for the collector, Uganda Revenue Authority. So now, under that principle of substance over form, for example, in Kenya, under section, I think 23 of their income tax, they have introduced anti-tax avoidance, where they cap that. And then even here, under our laws, I think it's chapter 11, section 116, 117, they're introducing substance over form. The Commissioner General has a right to reverse the transaction or to look into that transaction again, even where you think you've legally handled this. He reserves the right to go back and say, I think this has something to do with tax leakage, and they can look at it again. So that section 117 has helped tax collectors, and even can be basically used with tax appeals tribunal to make sure that there is no tax avoidance. Because if everyone has planned for their tax liabilities, believe me, everyone will have a percentage reduced. But, and that is if it is left open for every business to plan and avoid tax. So that substance over form principle is really helping to reduce tax avoidance. So the difference then is evasion is completely legal. Avoidance or planning is basically not illegal, but depending on how you plan, can also become illegal.
Okay.
Yes.
So evasion, illegal.
Yeah.
Avoidance is legal to a certain extent.
Exactly.
Okay. There are some examples I was thinking of, but then I can't say them on air. Otherwise, I would have given people ways
Tricks.
yeah, tricks. But as I was thinking about some of them in my head, although I was thinking when we speak now as human beings and not as tax collectors or as part of the law, I think people should have some form of tax planning. Okay? One I will mention without going into detail is like rental, whether to pay as an individual
or a company.
or as a company. I will not divulge the mathematics there, but I think to some extent people should have some of those things that help them to manage so that you don't lose everything again to tax.
Yeah.
So I don't know to what extent can people do that. That's where that section 117 comes in.
Yeah. You see, we have tax incentives that people can use, and tax avoidance becomes bad or becomes illegal depending on the interpretation and the act done. So the extent is, if the incentive is provided, then it can be enjoyed by a taxpayer. But where, for example, like you didn't want to use examples, but maybe let me say
any example you give.
reorganization, because the Act provides for reorganization or amalgamation of companies, where a company is joining with other. Because, for example, the case in point of that US, it's Gregory versus Hilvering. Now, this person was transferring shares to another company. It's a US case, old case. And it was provided to transfer to another company. But the declaration of what you're transferring and how you're handling the transaction is key. So for them, Gregory was handling it in a way, Evelyn Gregory was handling it in a way that they should not pay taxes on the shares transferred. So that's when the US court brought in the concept of substance over form. So the extent of how you handle tax avoidance is basically on interpretation and honesty in declarations. Yeah, in my opinion, that is the way it should be handled, and it can easily become illegal or you enjoy whatever the section is providing.
Okay, I get it. I think that the bit about being open about it gives some clarity. The honesty and transparency there gives some clarity. Okay, so we've talked about the laws, we've talked about the rights and obligations, which tax evasion avoidance, which form largely compliance, right? So what are the benefits of tax compliance? What do people benefit from complying?
Compliance has so many benefits, and but the main ones is when you're compliant, first of all, you don't get penalties, and then there are no fines, there are no penalties. Then if you're compliant, you don't have that tax stress, because we have seen companies closing. You don't face that closure of businesses, agent notices, where URA has to issue an agent notice, and then because it disorganizes your cash flow and the way you handle your businesses. So when you're compliant, you avoid such things of penalties, fines, closure, and everything. So the issue and the benefit of compliance is you even actually enjoy the incentives that the Act provides for. And we have even seen URA awarding compliant taxpayers. Even another thing is when a company is compliant all through, even when it gets a challenge, at least the taxman always knows that this person has been compliant. They don't have any issue, and they can easily get a remedy. And even voluntary disclosures, because if you're handling those voluntary disclosures, you can tell. You find a company, for example, you go in on the system and you find a company has not been compliant all through, and you ask for a compliance report and it's really, really bad. So there is no way that person will enjoy that voluntary disclosure. Or even if they did, but remember, if they declare for 1 year and then you go deep and you find it has not been compliant, then that means they are going to assess them for what they didn't voluntarily disclose. So you enjoy the benefits provided under the law, and even the programs given by Uganda Revenue Authority when you're compliant.
Okay. So basically, the way you say that the taxpayer rates are the tax collector's obligation. So in the same way, the benefits, on the other hand, would be associated with the costs of non-compliance.
Exactly. If you're not compliant, then things go bad. But if you're compliant, there is that favor you get, even under the law, even through URA, at least. And I always advise people, like businesses, when they come for guidance and what, if a company or a taxpayer, you know that you have not been compliant, at least from today, get to know that where you're not compliant, you have a chance to make things right. You can start from a clean slate now, because of the programs I'm telling you. There's this waiver of Section 47A. if you have not been compliant, you have penalties, you have fines, you have all those things to pay and you know it is heavy, use section 47A, the waiver that is stopping on 31st December this year. So if you pay your taxes, your principal now or before 31st December, you have a chance at least to be compliant this time. You have a chance to be removed, for penalties and fines to be removed. And if you know, maybe someone can say that the section under 47A is saying where you had a liability as a 30th June 2023. Now there are those who have liabilities after then and will not fall under the waiver. They can still do a voluntary disclosure. They do a voluntary disclosure and tell URA that, look, I have this liability, I'm willing to pay the principal, but you pray for the penalties to be removed. And then even coming and talking to your CRMs, client relationship manager, for you to have a memorandum of understanding with URA. Because surely URA is now at the point where they support more of a taxpayer and they want everyone to be compliant. So if you're really burdened and you've not been compliant up to this time, you have a chance. Use the waiver, you have a chance to use voluntary disclosures, you have a chance to come and talk and have a memorandum of understanding with URA and have a payment plan in installments and start afresh and have a clean tax record with URA. So there's always a chance and taxpayer can do it again.
Okay.
Yeah.
So I think what I'm picking from all this is, though we have the costs associated, which I think are largely penalties, fines, closure. For some people, they seize their goods. Some people go through shame, I think.
Reputation is taken off.
Yeah. So we also have a way to overcome these things. So in summary, how would you have spoken about the waiver, you've spoken about voluntary disclosure. Does alternative dispute resolution also fall there?
Yeah, it helps. But
you avoid...
Yeah, it helps because but alternative dispute resolution will come in where maybe you're not satisfied with the objection decision, then you go to ADR before going to TAT. And of course, the law says the limitation for going to TAT is almost the same time for going for ADR. So you find someone is going for ADR at the same time going to court, so to avoid delay. But ADR is also helpful because they can revise the decision made by maybe objections or any other team and then give another. They can reject the decision and give the rule otherwise. So even ADR helps. Before you go to court, you can apply to have your matter handled in ADR, alternative dispute resolution, and they will give you guidance and helpful.
Okay. I usually like to list those as some of the good things that the taxman offers.
Yeah.
Because for example, alternative dispute resolution, ADR, you have a high chance, of avoiding the legal costs of a court, of those court proceedings, paying these lawyers, and the risk of also losing at that point. Yet you've already gone through all this hassle.
Yeah, you don't have to go through all that when you have ADR. And then another thing, you see, some people use agents. Even some agents are not registered. And then an agent tells you, because for them, I'm not against agents, but some of them are not doing the right thing.
Yes.
So an agent tells you that, you see, you can avoid this, you cannot pay this. But remember, URA reserves the right to assess even after that time, even after 3 years, 5. So if you're avoiding now, because a tax agent has told you you should not pay. But remember, maybe in the next 2 years, you're not dealing with that tax agent again, and you paid them and you didn't pay URA. If when they assess, you're now going to pay, and they are going to assess you backwards, and you're going to pay all that principal, you're going to pay the penalty and fines. So I believe, and I'm telling the taxpayers, advising them that since URA is open, giving advice, you can walk in any tax station, you can write, at least always take the right choice. Even when you're using tax agents, they are good, they're informed, but where you see they are telling you not to pay and you know you're supposed to pay, you should take the choice of, even when you have this, you can still ask Uganda Revenue Authority, or because we're obligated to interpret and give guidance. So you can always take the right way and pay your taxes and be compliant.
Okay.
Yeah.
So thank you so much for that. We seem not to have enough, we don't seem to have a lot of questions. I think you've been clear. You know what they say when we're in school or in class, that there are no questions. Either people have not understood or they've understood.
Yeah.
So I'll go with the positive version of people have understood, because we have an Honorable Doro Don with a Ugandan flag on X saying thank you, URA. So I guess people have understood and there are no questions. So maybe you can give us some parting shots in relation to what we've discussed today.
Again, advising taxpayers to be compliant, because when you see the fines and penalties, they can even go beyond your principal. Because they find a penalty is double the tax, or 2% of the tax being paid. And when it is monthly, depending on the tax head,
It's compounded.
Exactly. So you find if you're supposed to pay 100 million and you don't pay, in a very short time, your tax liability is 300 million. So you lose as a business. And yet there are things you can actually do to avoid that, like the things I've been mentioning, to help you be compliant. Just reach out to URA, call, write, come for advice and guidance, and get involved in these programs they are giving for voluntary disclosure, waive and all that, so that you get your business working. Yes.
Okay. Thank you so much
You're
for
welcome.
joining us and for sharing that information. And please, to all those who have been viewing us, thank you for joining us. And reach out to us. We are actually friendly and nice people who are ready to help you. Unlike popular opinion out there, we want to listen to you. We want to take in that feedback, and the different channels through which you can reach us are running through the screen. We have a WhatsApp number on 0772 14 0, and then that's 14 and then 00000. Then we are on X, which is formerly Twitter. We have Facebook, we have LinkedIn, we're also on TikTok, we're on YouTube. Please reach out on those platforms as well. When you send in a question, the different people that manage those platforms will be able to pick up that feedback and send it through the different channels to the people responsible to get you a response or to get you help. We are on email, services@ura.go.ug. There's a toll-free line, which is 0800 117 000. That's 0800 117 and 3 zeros. We have 45 locations around the country. You can walk into any of these, and these are open from 8 a.m. to 5 p.m. Sometimes over the weekend, towards the end of key months like September. Actually, I think most months, but mostly September, December, they're extended hours just to support you, because those days usually have those special deadlines. We are approaching 15th, which is a key time to submit certain returns. That's for VAT, for pay as you earn. Any other? I think that's majorly it.
Mainly VAT.
mainly those two. So please don't miss out on these timelines. We have our website, which is www.ura.go.ug. You can also go to a browser like Google Chrome, and put in URA Touchpoint. It breaks down depending on the things you want to, the assistance you want to get. You kind of create an account, and then it breaks down the kind of assistance you're looking for. So if you want help with customs, you put customs. If you have recently applied for the jobs that were advertised, you can go there and look for HR. If you're looking for people to carry out tax education at your entity or in some of the communities that you're in, you go through and you look for tax education, so that it directs, and that thing is timed. Once that thing sends us alerts, we have a limited time in which we have to respond. So please, we would like to listen to you. We would like to hear from you. We also take feedback. If the laws have said something and you think it should be another way, you can make that proposal, and there are teams that carry that proposal to the Ministry of Finance to ask them if there are changes that can be made in the laws to make it better for you, so that we can create an enabling environment for you. So thank you so much, and we look forward to listening to you, and we look forward to hosting you, having you view our different shows again next week. Thank you so much, and be blessed.